Hello guys, and welcome to our free lesson, Risk Management. In this lesson we're going to show you how to set a proper stop loss and take profit using market structure and the fib retracement tool, how to define if a trade is worth taking the risk, and how to calculate your lot size so you don't risk more than 1% of your trading capital on every trade. I personally think that this lesson is one of the most important ones because, as many of you guys, I myself have suffered from a bad risk management before I've become a profitable trader. So let's start right away. I have decided to use the pair out JPY for this lesson. Okay, we are looking to short this pair. Let's make a short drop-down analysis so you can understand why. Starting from the monthly time frame, we can see that price is reaching an important level. This level has been used as support and resistance in the past. Going down to the weekly, we can see that this price has already been rejected twice from the monthly resistance zone. Okay. Going to the daily, we are able to identify an uptrend and push down the retracement. So if we measure the push, we can see that the price has reached the 0.786 fib level. Okay. If we zoom in, we also can identify a daily support zone which has not been broken yet. Going down to the 4-hour chart, at this moment, right now, our rules have not been satisfied yet, but we will demonstrate where to set the stop loss and take profit on this potential trade. Okay, so to satisfy our rules, we need to see a push down and then a retracement back at this level before we enter a short position. So we have now defined where we will enter our short position, around this area here. What do we need to do next? Okay, we need to set our stop loss and take profit. I've seen many of you guys using the same stop loss and take profit on every trade, which is wrong. Every trade is different, so you need to adjust your stop loss and take profit according to the market. At this moment right now, we will be looking for market structure, which we can identify here. Okay, this level has been used as support, resistance, and we will set our stop loss above this market structure. Okay. Why do we do this? Because there are manipulations in the market. Okay, I'm sure you all have been in the position where the market has hit your stop loss and then start running into your direction. So we need to protect our trade by setting the stop loss above this structure. So in the event of a manipulation, our stop loss will be protected by the market structure itself. If you set your stop loss below these market structures and banks or institutions decide to go for stop loss hunting, then you are in a big risk that you will get kicked out before this trade then starts running into your direction. So we will put it above the market structure, so the market structure itself will protect us. After defining where we will enter and where we will set our stop loss, we need to see the potential of this trade. Okay, where can we set our take profit? We said we had a nice push and then a retracement till the 0.78 fib level around here. To set our take profit, we will measure the retracement from the beginning till the end. At this example, from the bottom to the high. Okay, and we will receive these levels. We'll take that and put it here. Okay, so our take profit is at the 1.414 fib level. And if we look, we can see that there is a daily market structure aligning perfectly with our 1.414 fib level. Okay, you can use this strategy and test it yourself. So after a push, what do we have? A retracement, and when the retracement is completed, you can use the fib retracement tool to measure the retracement from the beginning to the end and set your take profit around this area here. You can backtest it and see that almost always the price will reach this zone here, this level, after a completion of a retracement. Okay, let me delete this real quick. So what have we done? We have defined where to enter, we have set our stop loss above previous market structure, and we have set our take profit at the 1.414 fib level. Now we will go and check the risk to reward ratio. Why? Because one of our rules is we never enter a trade with low risk reward of 1 to 3. We don't enter a trade when we risk 1k and can win less than 3. Okay, we always need to make sure that we win 3k or more. on every trade where we risk 1k. Why? Because let's calculate. If you enter 10 trades and you somehow manage to lose 7 out of 10, meaning that you won only 3. This shows me that you are not a good trader, but never mind. So if you make 10 trades, lose 7 and always risk 1k, you will have lost 7k at the end, okay? With these 3 trades, you would have made 9k, okay? So even with 3 winning trades out of 10, you would have made enough money to be in profit, okay? You would have made 2k. So never use a risk-reward ratio less than 3k. Even if you have only 3 winning trades out of 10, you will still be making money. Imagine if you make 5 winning trades or 7 winning trades, okay? It's gonna be a nice profit. Let me delete this real quick. Okay, so the risk to reward ratio is always above 3, so it's a good trade, worth taking the risk. What do we do now? We now go and check the stop loss, how many pips the stop loss includes. In this example, it includes 44 pips. Now I will measure what lot size I can use to not risk more than 1k, which is 1% of my trading capital, okay? So I have 44 pips. I use this site, by the way, forextime.com, okay? I have 44 pips. I trade the pair out GPY. If I use 1 lot, I will risk 365 euro. If I use 2 lot, it's 730 euros. If I use 3 lot, it's 1k 100 euro, too much. So I'll go back to 2.6, 2.7, 2.8. Okay, with 2.8 lot and a 44 pip stop loss, I will be risking 1k, which is 1% of my trading capital. Okay, so I'll mark that. 1k equals to 2.8 lot. Okay, so I'll be risking 1k to win 3.5k. Okay, so let's make a short summary of all this lesson. Okay, 1. Find a potential trade which satisfies all your trading rules. At the moment, this has not satisfied all our trading rules yet, but hopefully it will. 2. Set your stop loss above previous market structure without looking at the amount of pips your stop loss will need. Okay, it's not important. Important is that you set it above the previous market structure, so you're protected from market manipulations. 3. Set your take profit using the FIB levels. Okay, measure the retracement from the beginning till the end, and then set your take profit at the 1.414 FIB level. 4. Check if you have a risk to reward ratio of at least 1 to 3. If less, don't enter. Okay, only enter trades with 1 to 3 risk to reward ratio at least. 4. Calculate the lot size with which you will enter this trade so you do not risk more than 1% of your trading capital. If you have a 10k trading capital, don't risk more than 100. If you have a 1k capital, don't risk more than 10. Okay. And 5. Remember that even if you lose 7 out of 10 trades, you will still be profitable following these rules. Okay. I hope you enjoyed this free lesson and wish you nothing but winning trade in the market, guys. If you have questions, feel free to contact us on Telegram. See you in the next video. Bye bye.